What trends are you currently seeing in the Aussie property market? And how has that changed over the last, say, decade? And where do you see the space going?
I'll just go with the first things that come to the top of my mind. A couple of trends that I see is that Australians are now starting to become more like America, where we are utilizing professional services such as buyer's agents more now. That's becoming more consciously aware that, like, hey, there's a buyer's agent you can pay to buy property safer and with more certainty, with more visibility. So Australians are starting to move away from buying property on their own, which is a good thing, or buying property blindly. So that's shifted a lot in the last, I'd say, 3 years. And that's also thanks to COVID and technology. Other trends I'm seeing is Australians becoming more open to buying in, not like locally, like not buying next door, because old school traditional way of investing is like, you need to look at it, you need to drive past it, you need to do a cosmetic renovation. We don't need to do that anymore because we have things like AI, which means you can just buy a house, let it grow, rather than you manufacturing equity, which means you're slogging at it doing a renovation. That's manufacturing equity is the traditional old school way of making money through real estate, but we don't really need to do that anymore. So that's another cool trend. Properties that we were buying on average going up about 100 grand a year, which is wild. 4 properties that were buying for $300,000 12 months ago that are in the top 1% suburbs are now $400,000. So there's an opportunity cost that you're missing out on by not. So for example, in that scenario I was giving you before, if you had one house of $400,000 of equity, technically that's $400,000 of money you're missing out on making in capital growth next year by not owning the next 4 properties. Another trend is properties under $500,000. People are overpaying on average between 50 to 70 grand per property at the moment. Consumer confidence. What happens is when interest rates fucking go through the roof and then they come back down again, data shows us is that it takes 2 months on average for people to forget about the storm that just occurred. So for example, interest rates were going up and up and up and up and up. Usually most people are like, oh my God, I don't want to buy property because interest rates are going up. But then even after a huge climb, if they're flatlined, it only takes 2 months for people to feel more confident or forget about that they were going up. That's quite cool from a psychology perspective. The psychology of the sentiment impacts property more than actual people moving into an area, believe it or not.